Hey everybody, Jacob with Mortgage Coach Software Support. This video is to show you how to complete the rent versus own schedule in Edge. So what you'll do is you'll do it just like you were doing a total cost for somebody. So you'll open up a new client and then of course give the client name and address, all the pertinent information. Now, very important, when you're doing a rent versus own, you've got to make sure and check rent right here. If you don't check rent, it's not going to ask you for the rent. It's going to assume they have a current mortgage or they're just looking to purchase a new house independent of their current mortgage. So make sure you do fill out the rent part here. Got to check that. When you hit the next page, check the box to get your first home. And then the next page is going to ask you for their current rent, annual increases. For this, I like to use the same as I use for the appreciation on the property. 3% tends to work pretty well. Unless they're in rent control, they've got some kind of a rent increase that they undergo. If there's any other monthly insurance that they have to pay, renter's insurance, anything like that, you can put them in these boxes here. Now, when you get to your affordability screen, this is a little different here than it is in the total cost analysis. The data entry is the same, but what happens to it is a little bit different on the rent versus own report. Now, the rent versus own does factor in the tax benefit for their payment, so make sure and put their tax bracket in here. Now, it also factors in their savings balance and the rate of accumulation on that balance. When we're drawing our end conclusions here between renting and owning, you're going to see that you're looking at net worth on both sides. Now, net worth on the rent side is just a function of whatever they have in the savings growing over time. Net worth on the ownership side is going to be a function of whatever equity they have in the home after that set period of time, plus whatever they've got remaining in their savings after they've done their down payment. So in this case, I'm going to put $10,000 for their savings, and I'll say that that collects at 3% as well. And then of course you want to enter the mins and maxes on their mortgage payments and pricing, just so you have this for your notes. Then you get into the new products. So for instance, if I want to show this person how to do an FHA 30 fixed, I'm going to call it FHA 30 fixed. And then make sure and toggle it. Yes, it is an FHA loan. And let's say they're going for a $200,000 house. We're going to put in their down payment of 3.5%. And we'll put in the interest rate we can get them right now. And that's going to be over a 30-year term. Now when you hit the next button here, make sure and enter all your closing costs. If you want to, you can actually split these up in terms of your points versus other fees that are APR related. Usually if you've got this all as one figure, you can put it all just right here in the top one for APR related closing costs. The only time you'd really want to break them out is if you're doing a points versus no points scenario, where you wanted to show one scenario where they're paying an extra point and one where they're not. That way it's immediately visible on the report for your borrower. But of course, enter all the fees and costs that are associated with this loan. And since it's FHA, we've got to make sure and put in the upfront MIP. And I'm going to go ahead and finance it into the loan using the checkbox right here. Now make sure and put in your taxes and insurance. Remember, this is full PITI, so we've got to put these in. And for mortgage insurance, this is an FHA loan, so we're definitely going to put this one in here. We'll put 0.9. And notice the data entry here. We want this one to go for 60 months first, then it's going to cut off at the 78% LTV mark. If you don't put the 60 months in here, it's just going to go to the LTV, which is fine in this particular scenario because they've got such a low down payment. But if you're doing a high equity loan where they have more than 20% equity in their mortgage, this 78 is not going to apply, so it'll just automatically cut off. So you got to make sure for all FHA loans, put in the 60 right here so it goes for the mandatory 5 years before it can drop at the LTV. Now of course you want to continue adding products as necessary if you have more than one product that you'd like to show. For this case, I'm just going to go ahead and continue on. Now you can see that right now we've got our total rent payment of $20.25. Now note this payment, $964, is not our PITI payment. This is actually a net payment after the tax deduction has been taken out and after the principal payment has been taken out. Both of these costs are recoverable. They're getting it back in their tax return and they're getting the principal. They're retaining that in the form of equity. So those aren't viewed as costs in this particular scenario. Now if you need to do a term reduction payment, you can do that by hitting Adjust Reduction Payments. And then you can assign a term reduction payment, an additional payment. Say we wanted to have them put in another $100 a month. once you tab off that field, you're going to see that it updates your freedom point. So by putting in an extra $100 straight into principal every month, they've now knocked down their loan by over 5 years. So it's pretty effective, effective planning here. Now, for the short-term analysis and the long-term analysis, you have a couple of options. You can do total rent versus total principal paid, and you're always going to have negative figures on the rent side because obviously they're just kind of chucking money away by throwing it in rent. On the ownership side, you're going to have positive numbers because you are paying principal over time. Now, you can also choose to benchmark it against the tax benefit that they're receiving. So both of these are valid ways to show your client, look, you've got positive over here on the right, you've got completely negative on the left, and I can show you two different ways you're making money on the right side. And when you get to the long term, same thing. You can do total principal paid. You can do total interest in MI paid, and of course on the rent, that's just total rent paid. But this one is going to be probably the one that's going to be most effective for you. The total net worth. If they continue to rent in this 15-year scenario, that $10,000 would have grown to $15,674. On the ownership side, we've got equity plus whatever's left of that down payment growing. So at this point, we're obviously much better off going with the home ownership option. Now, of course, you want to enter your borrower's information. And then when we get to the presentation screen, this is going to default to the rent versus own because you selected rent in that first screen. So if you need to do a total cost analysis, for instance, you'd need to reselect this total cost here and proceed through the screens. But this one is a walkthrough on rent versus own, so that's where we're going to go. Hit the right arrow. This gives you the option to do things like add some additional verbiage here. If you want to explain that what this right side reflects, you probably want to tell them that this is after the principal has been deducted and after your tax benefit is being deducted. This is a net monthly payment. Now the report will show the full PITI breakdown for you, but you might want to make a note of it right here in the text area. And of course, these are the same screens we were looking at before. Our choice is carried through, so we're showing rent versus tax benefit on the 5-year setup. And then on the 15-year setup, I'm going to show total net worth between the two. When you get to the end, just like the other reports, you have the same options for deliverability. You can choose to email this report by preparing a link and then copying this link, then pasting that into a new email. I always recommend previewing your report before you ever send it out, so definitely hit the preview button here so you can see what it looks like. Alright, so here's our rent versus own report. You can see that we've got our total payment here of $1,484. That's a total PITI payment. We've got a tax benefit for month 1 of $286 and our principal payment of $234. That's how we're arriving at this $964 net payment. But when you're done with this, fire it out to your client, prepare a video around it if you'd like. I would also recommend, especially for a new renter, maybe show them the cost of waiting analysis so they can see what that looks like as well. But if you need any help on this, any questions about it, please feel free to email support@mortgagecoach.com and we'd be happy to help. Thank you. Bye-bye.